Hello and welcome to another video where we try to estimate the intrinsic value of different companies. In today's video we will have a look at UnitedHealth Group, which is a company in the healthcare sector with a very well diversified portfolio. Over the last 5 years they are up around 80%, and year to date they are down around 12%. UnitedHealth Group is a very strong company according to market cap, and also their dividend growth over the last 10 years is very consistent and strong. As usual, this is no investment advice, it's just my own opinion, and we will hop right into the valuation with 4 different valuation models. So we can see UnitedHealth Group trades around $458, and the EPS has grown very consistently over the last years and is at a peak around $21. They pay out the dividend around 1.64%. And this brings us now to the first valuation model, which is Graham's valuation, where we use Graham's revised formula. They have a strong EPS with $21 and an EPS growth rate projection of 13%. Please note that this growth rate projection might be true in the next few years, but this is very hard to maintain in a long time. This brings us to an intrinsic value of $415. Now let's have a look at the multiples valuation. So we can compare this company to the Cigna Group, CVS Health Corporation, Elevance and Humana. They have an average price earnings multiple of around $26. With the earnings per share of UnitedHealth Group, they have an intrinsic value of $580. The discounted cash flow analysis considers the free cash flow of the past years and projects them into the future with a growth rate projection of 5%. I have lowered this number because I think a growth rate of 18% is not maintainable in the long run. And this brings us to the future free cash flow of the next few years and also the present value of the future free cash flow. With a discount rate of 7.3% and the perceptual growth rate, we get the sum of the future free cash flows. Considering the amount of cash and cash equivalents of this company and also the total debt they have, we get the equity value. If we divide the equity value by the outstanding shares, we get the intrinsic value of this company according to the discounted cash flow analysis of $570. Now let's go to the dividend discount model. The dividend discount model considers their past dividends and also the average growth rate. They grew the dividend in the recent years with an average growth rate of around 21%. I do not think this is maintainable in the long run, so I would rather consider a lower growth rate of around 6%. And this brings us to an intrinsic value of $521. Considering all those valuations, we also know that UnitedHealth is consistently buying back shares, which is a very management-friendly action towards the shareholders. And I think this is a great move from the management. Now let's have a look at our output tab, where we have all of our valuations. That is Graham's valuation, the multiples valuation, dividend discount model, and also discounted cash flow analysis. Averaging them together brings us to an intrinsic value of $521. The current trading price is around $458. If we apply a margin of safety of 20%, we get an acceptable buy price of $417. I do not think you often have the chance to buy such a huge company with a very well diversified portfolio with a margin of safety of 20%. So I would say rather 10% is a realistic value. And this brings down the acceptable buy price to $469. Please keep in mind this is no investment advice, this is just my personal opinion, and I would be very happy if you would leave down a comment below what you think about this company, if you consider buying this at the current price or if you rather wait if it gets cheaper.